Welcome back to Investing Talk Podcast. Today, we're zooming in on Valley National Bancorp, that's VLY. You sent over some interesting information, and our aim today is really to distill the key takeaways. We want to give everyone a solid understanding of what's going on with this regional bank. We've got financials, how they operate, recent news, analyst thoughts, quite a bit to unpack.
Sounds good. Where should we start?
Let's start with the financial performance. What really jumps out from their recent numbers, we see their revenue for the last 12 months ending December 2024 was around $1.52 billion.
Right.
That number, it seems like it's had some ups and downs recently, probably tied to market shifts, maybe their own strategic moves too. What are your initial thoughts on that?
Yeah, the $1.52 billion, the story behind it is pretty interesting, I think. For a regional bank this size, seeing revenue fluctuate like that, it does suggest they're navigating some significant shifts. The key thing to watch here is whether those strategic moves they're making start to stabilize revenue or, if these fluctuations point to maybe more fundamental issues in their core business, something to keep an eye on in future reports.
Got it. Moving on to profitability then. Their earnings per share, EPS, for Q4 2024 came in at $0.20. That's actually up from the quarter before and the same time last year. Seems positive, right? What might be driving that improvement?
Well, that uptick in EPS, it likely reflects some of the efforts we've seen from management to boost profitability. CEO Ira Robbins, he's been guiding initiatives focused on strengthening their financial standing, and these EPS numbers kind of hint that those efforts might be gaining some traction.
So maybe cost control.
Yeah.
Or those loan portfolio changes.
Could be a mix. Better cost control, yeah. The changes in their loan book we'll probably get into. Or honestly, maybe even just favorable market conditions during that specific period. Hard to pin down just one thing.
Makes sense. Okay, their price-to-earnings ratio, PE, is sitting around 12.3 times.
Yeah.
How does that stack up against other banks, and what could that tell us about how the market values them?
Thinking about the bigger picture, a PE of 12.3, it could mean a couple of things. The market might see them as, fairly valued based on earnings, or maybe even a bit undervalued if the average PE for similar banks is higher.
Right.
But you have to keep in mind, PE ratios, they can vary quite a bit depending on the specific type of bank and its growth potential.
And what about their debt? Debt-to-equity ratio is 50.6%. Seems moderate. What are the implications there for risk?
Yeah, 50.6% does seem like a reasonable level. Think of it like this. A company funding its operations with a balance of its own money equity and borrowed money debt. A moderate ratio like this generally suggests they aren't perhaps overly reliant on borrowing. That can offer more stability, especially
when the economy is uncertain.
Exactly, when things are a bit shaky. Now, of course, banks naturally use leverage as part of their business model, so you expect some debt.
Okay. We also see a return on equity, ROE, of 6.38% for that last quarter of 2024. They say that's competitive. What does that really mean?
Yeah.
And what usually drives ROE for banks anyway?
Right. So when an ROE of, 6.38% is called competitive, it likely means it's in a similar ballpark to what other regional banks of a comparable size are achieving.
Okay.
Now, what influences a bank's ROE? Well, it boils down to a few things. How profitable they are, so net income versus revenue, how efficiently they use their assets to generate that revenue, and how much leverage, how much debt they use to boost those returns.
So competitive means they're holding their own.
It suggests that, yeah. Holding its own in those key areas relative to its peers, at least for that period.
Okay, let's move beyond just the numbers. Let's talk about the business itself. What are some of the main ways Valley National Bancorp tries to, get ahead of the competition? Our info points to their well-known name, keeping a close eye on costs.
Cost management.
And a deliberate move towards lending more to businesses, commercial and industrial loans and consumers. Why is that shift in lending focus potentially a big deal?
That shift is quite interesting. C&I loans, commercial and industrial, they often come with higher interest rates. Plus, they can lead to stronger, maybe longer-term relationships with business clients.
Okay.
And consumer loans, they can carry more risk depending on the economy, sure, but they offer a way to diversify their loan book away from areas like, say, commercial real estate.
And the brand and costs.
Oh, absolutely.
Yeah.
The established brand helps them attract and keep customers, no doubt. And that focus on cost management, it directly supports those improved profitability figures we were just talking about. It all kind of ties together.
Valley National Bank has branches in several states: New Jersey, New York, Florida, Alabama, California, Illinois.
Quite a footprint.
They aren't a nationwide giant, obviously, but they are a significant player in these regions. How important is it for a bank like this to have its operations spread out geographically?
Oh, spreading out geographically is it's pretty important for a regional bank. It really helps them mitigate risk. Well, if the economy in one region takes a downturn, their overall performance is less likely to get slammed if they have healthy operations going in other areas. This diversification, it also lets them tap into different customer bases, potentially benefit from different economic cycles across the country.
Right, makes sense. Okay, what about major industry trends right now? What could impact Valley National Bancorp? The information mentions their expansion in those C&I and consumer loans we talked about. Also, the possibility of interest rates changing in a way that benefits them, like a steepening yield curve.
Potential tailwinds.
But on the flip side, they also highlight risks. Regulatory changes, economic downturns, and, of course, the constant advancements in technology. Which of these do you think deserves the most attention right now?
Hmm. That's a good question. When you look at all those factors, I'd say the interplay between the overall economic outlook and any shifts in banking regulations probably warrants the closest watch at this moment.
Why those two specifically?
Well, an economic slowdown, that could dampen loan demand, obviously, and increase the risk of defaults across the board. And at the same time, any significant changes in how banks are regulated could create both challenges and opportunities for regional players like Valley National Bancorp. It affects things like capital requirements, lending practices, their day-to-day operations.
So, macroeconomy and regulations are top of mind.
Got it. Let's turn our attention to leadership. CEO Ira Robbins is guiding the company through these strategic initiatives. We don't have a detailed history of his tenure here, but the focus seems to be on boosting profitability and their overall financial health. In today's complex banking world, how critical is having strong leadership?
Oh, strong leadership is absolutely essential, especially today. The banking landscape is changing so rapidly. You've got technology evolving fast, regulations shifting, the economy can be unpredictable.
It's a lot to navigate. It really is. A capable CEO needs to, first, develop a clear vision for the future, and then effectively execute that plan, adapt when things change, and, crucially, build confidence. Confidence among investors and the bank's own employees. The fact that their current focus is on improving profitability and financial health, that suggests a proactive approach, which, is generally a positive sign.
Let's talk valuation. Their price-to-book ratio is around 0.6 times.
Okay, below 1.
Yeah, which suggests the stock might be selling for less than the value of its assets on the books. What are some reasons why that might happen?
Well, a price to book below 1 often signals that the market has some concerns, maybe about the company's ability to generate future profits or perhaps the quality of its assets. It could also just reflect broader uncertainties, in the economy or specific challenges within the banking sector itself.
And for Valley National.
In their case, those revenue and net income declines we saw for the full year 2024. They might well be contributing to this lower valuation. The market could be a bit cautious.
Okay. They also have a dividend, yields about 5.6%, and they recently announced a payment of 0.11 cents per share. For someone looking for income, how attractive is that?
For an investor focused on generating income, a 5.6% yield is, frankly, quite attractive, especially when you look at the current interest rate environment. And a history of consistent dividend payments, that's also a reassuring factor for income seekers. Shows commitment.
Good point. Lastly, on valuation, their beta is 1.09. Indicates slightly higher volatility than the overall market. Is that something investors should be particularly aware of?
Yes, definitely something to be aware of. A beta just over 1.09, tells us the stock's price tends to move a bit more, amplify the market's ups and downs, basically.
So more risk, potentially.
Higher volatility, yeah. It's something an investor should keep in mind, particularly if they have maybe a shorter investment horizon or just prefer investments with less price fluctuation day to day.
Okay, this is interesting. The information we have highlights that their revenue down 16.73% and net income down 25.60% in 2024 were lower compared to the year before, and that's flagged as a concern.
Right, those are significant drops.
However, their performance in the fourth quarter of 2024 showed some improvements, like a decrease in their CRE commercial real estate concentration, and their loan-to-deposit ratio got better. How do we make sense of these seemingly conflicting signals?
It's this contrast that really tells the story, I think. The fact that their full year 2024 numbers were down, that's definitely something investors would notice, and it likely contributed to the stock maybe underperforming some peers.
Okay.
But Those positive trends you mentioned in Q4, lower CRE concentration,
Right.
better loan-to-deposit ratio, they suggest that the strategic adjustments the company's been making might be starting to pay off.
So a turnaround potentially starting.
It looks like a situation where, yeah, the overall trend for the past year was negative, but there's some recent momentum hinting at a potential shift. Investors will be watching very closely to see if these positive Q4 trends actually continue into 2025.
Which leads perfectly into analyst sentiment. It looks like analysts who follow the company are generally optimistic. Average rating of buy and a 12-month price target suggest the stock could go up. How much weight should we give to what analysts are saying?
It's always wise to approach analyst ratings with, well, a degree of caution. A consensus buy and a positive price target can be encouraging, sure. But it's crucial to remember these are opinions, projections. They're not guarantees.
Right, they can be wrong.
Absolutely. Analysts base their views on their assessment of public info and their forecasts, and forecasts can certainly be off the mark. Analyst ratings can give you a general sense of how the market feels, maybe, but it's always best for investors to do their own homework, their own thorough research, and not just rely solely on these recommendations. Maybe look at the reasons behind the ratings, too.
Good advice. Okay, Valley National Bancorp operates alongside other regional banks like M&T Bank, Fifth Third.
Some big players in that space.
Yeah. And while Valley National might have a smaller slice of the market, they are showing signs of expansion, like opening a branch in Beverly Hills, partnering with Finley Technologies to improve credit management. How critical is innovation and strategic expansion for regional banks today?
In today's financial world, being innovative and pursuing smart growth is becoming, I'd say, increasingly vital for regional banks just to stay competitive. They're facing pressure from fintechs, newer players, and customers just expect more sophisticated digital services now.
Right, the tech side is huge.
Definitely. That partnership with Finley Technologies you mentioned, that's a good example of using tech to boost efficiency, maybe lower risk in their credit management, and strategic expansion, like opening a branch in a key market like Beverly Hills. That can help drive growth in loans and deposits, though obviously it involves costs and risks too.
So they need to adapt and grow carefully.
Pretty much. For a smaller regional player to really thrive, adapting to tech changes and carefully expanding their reach can be key ways to stand out from the crowd.
Okay, looking ahead, the company is set to release its first quarter 2025 earnings on April 24th. That's coming up. What specific numbers or announcements should we be paying close attention to in that report?
Right, that upcoming release will be key. There are several areas to watch. First, we'll want to see if those positive trends from Q4 2024 actually continued. Specifically, keep an eye on revenue. Is it growing, or at least stabilizing?
Okay.
Has their EPS continued to improve? What's happening with that loan portfolio? Are the C&I and consumer loans growing? Has the CRE concentration kept decreasing?
Net interest margin, too.
Definitely. Net interest margin, which tells us about their core lending profitability. Any updates on asset quality? Are loan losses creeping up or staying contained? And finally, listen really carefully to what management says on their conference call, particularly their outlook for the rest of the year, and any comments on how the economy or regulations might impact them going forward.
Lots to look for then. Okay, so to kind of wrap things up here, Valley National Bancorp looks like, well, a bit of a mixed picture, wouldn't you say?
I don't think that's fair.
You have a company with a solid financial health rating, a consistent dividend, which is attractive. They're making these deliberate strategic shifts in their loan portfolio. And analysts seem generally optimistic about the potential.
Of the positives.
However, there have been those recent declines in revenue and income, and the stock hasn't performed quite as well as some other regional banks. That upcoming earnings report, it feels like it should provide some much-needed clarity.
I agree. Considering the broader context, Valley National Bancorp appears to be a company really in transformation. They seem to be actively addressing past challenges, positioning themselves for growth through these strategic moves. But those contrasting signals past underperformance versus recent hints of improvement, they really underscore the uncertainty and highlight just how important it is to track their progress in the coming quarters.
Okay, one final point then, maybe something for our listeners to think about. How well do you believe those strategic shifts towards C&I and consumer loans, how well do they align with where you see the economy heading? And what are the potential long-term effects this could have on Valley National Bancorp's performance and the risks they face? We hope this closer look at Valley National Bancorp has provided some valuable insights based on the information you shared. If you found this helpful, please do subscribe, like the video, and maybe leave a comment with any further questions you have, or perhaps other companies you'd be interested in us exploring.